Good afternoon, and welcome to another edition of Investment Literacy. I'm Mukund, your host, and today we have with us Jarvis Alerts. And I have been following Jarvis Alerts for quite a bit of time. We go back and forth on Twitter quite a bit as well. He does a lot of work with options activity. And I know a lot of the audience that I have tends to want to learn more about options. So that'll be a great opportunity to say hello to Jarvis, talk to him about his background, talk to him about his strategy, how he goes about doing his work, how he got started. And I'm looking forward to it. It'll be exciting. Jarvis, welcome.
Thank you so much, Mukund. Happy to be here.
Likewise, very happy to have you. So you are based in Canada, is that right?
Yeah, that's correct. I'm in Toronto.
Excellent. And how long have you been trading stocks and options?
So trading has been, I think I started getting deeply involved in trading after 2018. Before that, I have been investing in my 401k and the Roth IRA equivalent accounts in Canada. They're called RRSP and TFSAs. So I've been investing, but got into trading more actively since 2018.
Excellent. And what got you interested in trading? And specifically, talk to me about what your background was, because a lot of our investors and the followers tend to be people that have either a day job and they're trying to get into full-time trading, or they have a day job, they want to be able to participate and continue.
Yeah, so my dad is a retired banker, so I grew up watching him being involved. He used to invest in stocks, so I had a background of stocks. I knew about the market. And then in 2008, 2008, I moved to Canada for job, and my focus was mostly job. So I kept on investing on the side, but I always liked the idea of stock market. I always loved the excitement. And then talking with my dad, I mean, he always had some suggestions for me. So I had that background, but I think I couldn't just commit myself to actively participate in the market until 2018. That's when I just started being more active, doing stock trades. Eventually, I learned about options data, and then I learned about unusual options activity through Twitter. There were some groups on stock tweets that used to post about unusual options activity, and that got me excited. And then started looking into it, and yeah, so it gradually picked up, and now I have a like a website which is a tracker for unusual options activity. We try to do things a little differently than most unusual option activities. My I do have a regular job as a solution architect. So I have tech background. So I love technology. I love programming. And when I look at options data and charts, I try to use those skills and try to automate some of my stuff.
What made you move from not trading before 2018 to actually start trading in 2018? What was the trigger?
It was honestly, I don't think there was a big trigger. I think it was just I just had extra time to focus on things. When I came here, my focus was my job and my career, then family, then kids, and then home. And then once there were enough things off my plate, I always wanted to get involved into trading. Luckily, I found a group here. They used to talk quite a lot about stocks. Some of them were day traders, and then it just worked out to be like, hey, maybe this is the time I should start.
Very cool. So most of our audience doesn't know what unusual options activity is. So two things. Explain what unusual options activity is. And then second, for the people that do know it, Tell us a little bit about what is unusual about certain options. What are some of the signals that you look for? And tell us what is it that you share on your website that helps people to be able to understand how to take advantage of unusual options activity.
Right. So in the options market, which is quite huge, a lot of moves on the price action are driven by, or they're very highly correlated with the options trading that happens. So when you buy a contract, a call contract, it's like you're giving uh, a a premium to the seller of the contract for a contract of buying that stock at the agreed strike price. Uh, Usually, whenever you are buying, there are market makers who want to provide liquidity to the market. So they are the ones who are selling you, but they cannot stay. Uh, they want to always cover their base, and by that they try to have a neutral gamma profile. So they would, so if you're buying calls and they're selling calls, they would buy the stocks to hedge themselves, and that kind of moves the market, that moves the underlying stock. So when there is a impending news, so a lot of times the medical companies have FDA approvals. There's news. There's potentially a news about acquisition. There's about a news for a new product.
Yeah,
Uh, People who know, and again, that, like we say, the insider tradings based on insider information is uh, bad, but we do see a lot of active trades where they're aggressively chasing a really higher strike price for a stock in a short period of time. So I remember back in when Beyond Meat was going to partner with Pepsi, the stock wasn't doing much, but we started seeing a lot of massive call volume. And then in a few days, the news came out, and everybody then complains, right? They say buy the rumor and sell the news. That's what happens because they were already positioned. The news came out, the stock jumped, and then they started liquidating, and that causes the stock to go down. So this tends to happen quite a lot. And when big boys in the market do these kinds of things, they are the signature of their activity is highly unusual. um, they tend to go heavy, and they tend to go late because they don't want to reveal their cards,
right.
and that makes a, a regular options trade versus an unusual options trade.
What are the triggers you look for, and where and how do you learn about, or how did you start learning about it first?
Yeah, so when I joined Stock Tweets, there were a few accounts. I don't remember their names, but they used to tweet screenshots of unusual options data. So I had no idea of. Uh, I always thought when you buy an option, somebody sold you an option. But there is a nuance to it, which is like, was it bought at bid, or was it bought at ask, or was it above ask? And I try to read up upon those. So basically, there is always a spread between the bid and ask. Uh, Usually, when somebody is really aggressive and they really want to take the position and they're pressed for time, they are willing to pay extra premium, and they want to go hard at it. So that's where we see a lot of unusual option activity posts on Twitter, stock tweets. There are lots of nice platforms that publish this data, like Cheddar Flow, Flow Algo, Blackbox, Benzinga, and they usually come up with underscore A. It's like above ask. Underscore BB is below bid. uh, that's basically it. It got me interested in understanding what that was, and I started reading about it. I started learning the options gamma. I started learning about different Greeks, and what do they mean, how do they impact the option pricing.
Got it. So there's no real book or video. You just started learning from watching other people, reading more about it, or I guess experimenting more with it. Is that right?
That's true in my case. I did read a few books. There are actually there's a book on options pricing. It was really heavy. I couldn't make sense of it. I tried to read it, but it just went over my head. But it did give me, the keywords and the lingo and the words that they use, and then my idea, then it was my job to, just search about those things. What does it mean? Like, what's gamma? What's vega?
How long did it take you to learn it then?
I think I'm still learning the options world and the way the options Greeks move and their correlation with the underlying stock prices. It's just a phenomenal, like it's in the realm of data science and somewhat machine learning. It's really complicated, and there is so much to be learned. I still find new things every day. I found about GEX, the gamma expiration profiles, about a few months ago. I'm still trying to wrap my head around it. It's there's so much more to know.
Yeah, every time you peel a layer of the onion, there seems to be more layers coming in, right?
Yeah, exactly.
So now that you're starting to work with unusual options, is that the only trading strategy that you follow, or how do you define your trading strategy? How did Jarvis Trades define what you work on? What are the trades that are right setup for you, and what are the trades that you won't take?
Yeah, so it's a bit of a mix of technical analysis using charts and unusual options activity. So I would say the way it works is, for me, I look at the unusual options activity to know which stocks are kind of like hot. So hot as in which stocks are getting attention from the big boys in the market, and that forms my watch list, so to speak. And then when I'm looking at the unusual options activity, I try to focus on big call strikes and the big put strikes. So when there is a huge money on a, but let's say a stock is trading at like $50, and there is a huge call volume which has been accumulating over the past few days at 60. So that 60 becomes like a call wall. Uh, it acts like a magnet. At the same time, there'll be maybe there is a huge accumulation of puts on the lower side. So these two levels kind of become like the magnets,
The
and the
floor
price
and
tends
the
to,
floor and the ceiling in some senses,
yeah,
support
yeah.
resistance.
And then what I do is then I try to make sense of that information by looking at the charts. And if I see if a 60 indeed is a resistance level, and then stock is wanting to go there, uh, or say 40 is the support, then I've changed my strategy in late 20, or actually half of the 2018, later half of the 2018, to become a premium seller. I used to buy options a lot, and it's tough because I honestly don't have time these days to be sitting in front of the screen and watch the price action.
Yeah.
So I've resorted to the style that works for me, which is I look at these support and resistance levels and the call and put walls, and I try to sell options above and below those values, because most cases the market makers uh, do not like to cross those walls, because then they have to rebalance themselves again. Um, so it doesn't work exactly like this every week, every month, but it tends to happen a lot. So by becoming the option sellers, I don't have to worry about the options decay.
Right. And so when you sell options, you sell obviously both put and call options, I'm assuming, right?
Yeah, so it depends on the setup. If the setup is bullish, I would sell the puts. If the setup is bearish and I'm already seeing the stock at the level where it's hard to climb above, then I would sell the covered calls.
Mm.
So by covered calls, I if I have the
You already
stocks,
have the stock.
yeah, and then I would sell the higher strike prices, which are unlikely to hit. If they're hit, I'm fine to let those stocks go because I can just buy those stocks again. And
Do you use and prefer to have a specific charting platform? And what is your brokerage platform?
yes, I tried a couple of charting platforms. Watch the one that I stuck with is TradingView,
Hmm.
and it's primarily because of their uh, fantastic desktop app. It doesn't run in browser, so I don't have to worry about memory issues and slowness and lagginess. Uh, and their desktop app is really amazing. Trend Spider I've used. They are also brilliant. There are certain like there are lots of great features that they have. Uh, but for me, for my style, uh, I prefer the Windows application a lot more, and that's why I just stuck with Trend Trading.
Okay, and what about your brokerage platform? Are you Ameritrade, Think and Swim guy?
Uh, no, we don't get those awesome platforms in Canada.
Which
Canada
is
is really bad.
surprising, right? TD Ameritrade is
It's
a
so bad.
Canadian company.
So the pricing on TD in Canada is so bad. You get like no fees trading. You get like really cheap options trading in US. Lots of other platforms offer the same. In Canada, we are still paying like 4.99 on Quest Trade. It's a smaller brokerage. 4.99 per trade. It's off. The only good option in Canada is the interactive brokers,
Hmm.
which is like I think they charge $1 for 100 stocks or $1 for an options contract. So
You're using interactive brokers right now?
I'm on interactive brokers. So for the most part, I'm on interactive brokers. I have my work related retirement saving, which I cannot choose. It's with Royal Bank, and it's I pay like 9.95 for every trade. It's awful.
That is funny, man. That is really funny.
It's
A little bit about
the people north of the wall are screwed so
that's
bad.
tell me a little bit about your your community involvement on Twitter. I know that you follow a lot of people, you engage with a lot of people, you built your own community and website and Discord server, I'm assuming right now, because I went and checked it out before I came in. How have you grown that, and how useful or how different do you think Twitter has become now versus maybe even a year and a half ago when everything was in a bull market? Seemed like everybody was patting everybody's back. Now Twitter seems to
Yes,
have changed a little bit, isn't it?
yes, it's changed quite a lot. So I think 2020 was everybody was on lockdown, so I think that fueled a lot of like a lot of trading. Day traders were born in 2020. People were getting free money from government that fueled their day trading accounts. And 2021 was I probably I mean I would go on a limb say that was the best year everybody had. Uh, but it
For a
was really
lot of
bad
us, for a lot
because
of us.
yeah, but from when I'm looking at it in the hindsight, which is always 2020, it was actually the really bad year because that taught people extremely bad habits. Like that formed bad habits for a lot of people. People thought everybody was a hero in 2021 because you throw money anywhere, it worked. uh, it stopped working in 2022, and the people started complaining about, hey, technical analysis doesn't work. It it doesn't work because everything's changed now. uh, so it was a great year in terms of returns, but it was a bad year because it taught bad habits, and I'm not immune to it. I had i i basically made so many mistakes in the first half of 2022. um, and then I had to step back and say, like, think, pause, and then reassess everything, because this is not working. Buying options not working for me. So I've switched to a more moderate, less is more kind of an approach, where I'm willing to not go crazy behind a trade. I'm okay to sell premiums, get less money, but at least it's consistent. So I've been happy the way the trades are going since
You know, the
the, I guess, last few months and early, like the first quarter of 2023.
the fascinating part is I've talked to at least hundreds of people with interviews. I'm always amazed at what different strategies people adopt, and every one of them seems to work in some way, shape, or form in some situations, and everybody finds their groove after a certain point of time. The key seems to be don't give up. Key seems to be keep learning. And key seems to be just make sure that you are disciplined about understanding what seems to work for you. Because I've talked to another person who moved from selling calls and puts to only buying options. And he
Ah,
is a guy called Dave who lives in Vancouver.
interesting.
And he says, I
Yeah,
swear by it, I will not do anything else.
that's amazing. See, that's the beauty of the market. The market, like, there's nothing. There is there is a game. There is a trade for everybody. You just have to find the one that works for you. Um, so I really like one line by Warren Buffett. He's like, the market's gonna throw pitches at you every day. It's up to you whether you want to take it or not. It's not necessary to go for every shot. So I guess what you said about discipline, I think that's the key here.
I
Once you
think going with the same Warren Buffett analogy, the market, I think what I would extend it to say is the market keeps throwing pitches at you every day. And also there are different people that pitch, meaning each strategy is different. For example, if your strategy is to only sell options, that's one strategy versus another one like Dave I talked to is only buying options. So that's a different picture in that
right,
analogy, right? And even that picture gives you so many different options. I'm sorry, so many different opportunities to trade every single day. You don't have to swing every single time.
that's correct. And that's why once you refine your own strategy, and two people can almost every day trade, or not every day, I mean almost trade like exactly opposite of each other and still be profitable.
Yeah, both of you make money. Usually we hear this term, it's a zero-sum game. Somebody has to win, which means somebody else has to lose. That doesn't seem, well, I haven't
No,
talked
I
to
don't believe
anybody that
that.
has lost yet.
Yeah, I don't believe that. I don't think it's a zero sum game. There is there is an opportunity and like a strategy that anyone can perfect, and that would be his own strategy. It may or may not work for other people.
Yeah, no, I absolutely agree with you. It's been fascinating to hear that portion of it. Let's switch gears a little bit. Tell me a little bit about if someone, for example, last week I spoke to a couple of people who are part of my class, and they're just trying to get started. For someone starting new, with not a lot of background in the market itself, do you recommend, in your mind, if someone was new, if you were new, would you start with options and learning about options? Would you start with stocks or would you start with something else?
So I've burned a few accounts in the beginning. I would say definitely do not start with options. Start with stocks, and the way that worked for me, the idea that worked for me was, try to distance yourself from the news and uh, like the fundamentals, because I don't understand them. I don't understand what ISM is, what I don't understand PPI, CPI, prints. Uh, the the people who are market participants, they understand it and they trade it. And when they trade it, it prints on the chart. So the chart is like a distillation of what market has reacted to something. Maybe it's an ER, maybe it's a news, maybe it's the Fed's FOMC minutes. I cannot understand any of it. I focus on I focus on what the chart's doing, and that tells me whether it was good or bad. I would advise them to focus on basics, at least the basics of charting.
How did you go about learning charting? What are one or two resources you found the most useful when you were starting?
Okay, the so I started by looking at other people mostly. And when I tried to replicate what they were doing, I was failing miserably. So then I was like, this is not working. I need to understand what it is. So there's an amazing book called Japanese Candlestick Patterns. It's a foundational book. It just tells you about what a chart is, what a bullish candle is, what a bearish candle is, what's a doji. very foundational knowledge. And once I picked up those things, then I started understanding what the experienced chartists were posting on Twitter. So Traders TV is an amazing account.
Right.
Mark
Traders TV, right?
Minervini, yeah, Mark Minervini's VCP pattern is just mind blowing. He had some YouTube videos also, so I picked up most of it from uh, Traders TV, Mark Minervini, Adaptive Charts, Ian Macmillan. He has like the most cleanest charts I've ever seen on Twitter, um, and uh, and just anybody who's like I used to go on YouTube and try to learn, uh, because once you see the chart, you just see what they did, but then YouTube gives you their thought process, which helps.
You said Traders TV, you said Mark Minervini, and you said one more. Which one was
Yeah,
that?
Ian Macmillan, I think he goes by the handle Adaptive Charts. Yeah, it's the underscore chart underscore life. Ian Macmillan. He's a CMT.
So you said the underscore charts, talk of the charts?
The underscore chart underscore life.
Ah, okay. Real life pie charts. Oh, I'm not finding that. I'll find it.
Yeah. Yeah, so I basically follow a lot of people um, on Twitter. I find Puru Saxena quite like he's brilliant at what he does. People complain about him quite a lot, says he flip flops, but then this is the game. You have to react when things change.
Yeah, I think, whenever I chat with Puru, whether it's on WhatsApp or just have a discussion, what I have found is his mind races very quickly because he's very experienced at a hedge fund level. And it is
Right.
hard for individuals that don't operate at that level to understand how, and where he moves. So
Exactly.
because they don't understand it, they think that he is just doing a bunch of stuff,
Yeah.
which I think is the unfortunate part for them to say, oh, okay, that's what they've done.
Yeah, and actually, when earlier you said about Twitter's changed, and yeah, that basically we can see that every day. People used to be happy and cheering a lot, but now there is so many troll accounts, and people are just trying to come and bite. Um, it's sad, but at the same time, it is what it is. I try to cut noise. I like Puru a lot. I value his opinions, his stats or posts that he puts. Um, yeah, I don't really understand the hate for him, really.
Everybody has their own
Right,
pluses, minuses. They have their own view of things. I think Twitter is a place where you've got to have a thick skin and
right.
just assume that people are going to smear you for any reason, sometimes good, sometimes bad. It doesn't really matter. But
Yeah,
this was a really fascinating conversation, Jarvis. I think I really enjoyed the discussion. I was fascinated by the fact that you seem to have gotten your niche very, very well, which is selling of options, and you've done very, very well. And the most encouraging part is you learned this all by a combination of Twitter. It's taken years. I mean, 2018 you got started. Now you've gotten your groove. It's 2023. It's taken 5 years, but I'm sure you've been successful even from 2018 to 2020, and then you had to change your direction 2020. I was speaking to another guy, JJM Stocks, Jim. And he
hmm,
was saying, man, when I was in 2020, I'd buy something, throw something on the wall, make money. Now it's like day trading. I have to be on top of it, or
exactly.
things change very quickly.
Right. And that was one of the reason why because I tried the same strategies I used in 2021 and they stopped to work in 2020, early part of the 2022. And I had to step back and think like I think I switched jobs in between, and then I had to pay more attention. Like I couldn't pay as much attention to the markets, so I had to devise something that worked with my piece, where I'm not really looking at the charts, not really on the screen. I would I would take a trade, take a position, swing it for week or two and work my way through it.
Awesome. Thank you, Jarvis. Thank you so much for the time. It was a really great conversation. I'm looking forward to seeing you again on Twitter, and hopefully we'll connect up fairly more frequently than, once in a while that we do.
Yeah, pleasure is mine. Thank you so much.
Take
Bye
care.
bye.
Bye.
Bye bye for now.